Bad and doubtful debts. This is our next topic, and we are going to basically talk about both bad and doubtful debts. How are they recorded? To begin with, we are going to basically define them, and then we are going to discuss their treatment in the income statement and in the statement of financial position as well. Now, when we are talking about bad debts are basically, those debts which were supposed to be collected from your customers or your trade receivables, but somehow, due to a problem, now you are unable to recover them. You have lost hope of recovering those debts from your customers. You sold goods to your customers, and you obviously sold the goods to your customers, for earning revenue, and you sold them on credit. That is, you did not receive the money upfront. Now you are struggling to get the money recovered from the customers. Either the customer has died, or he has become bankrupt, or maybe he has left the country. So now you know that the money is not going to come back. So those debts which were supposed to be collected, those trade receivables which were supposed to be collected, and you have very little or no hope of recovering money from those debts or from those customers or trade receivables. Those type of debts are called bad debts. So bad debts are those debts of a business which are also called irrecoverable debts. So irrecoverable debts are basically losses of the business, or losses may also be termed as expenses of the business. Basically, expenses are debit in nature, so they are going to be recorded by the journal entry. When we are going to record it, the journal entry is going to be bad debts debit and trade receivables credit. So bad debts debit and trade receivable credit, that is the entry for recording bad debts. Now these bad debts are obviously going to come in the income statement under the heading of expenses. Once we have calculated the gross profit, underneath the gross profit, when we are taking away all the expenses or indirect expenses or other expenses or miscellaneous expenses, under the heading of those expenses, bad debts are also going to be recorded, because they are also expenses or losses in nature. If bad debts have occurred during the year, then they are not recorded under the statement of financial position or balance sheet. They are only recorded in the statement of financial position if they are incurred at the very end of the year and they have not been accounted for before the end of the year. If they have already been accounted for before the end of the year, then they have already reduced the trade receivables, because I told you the entry that bad debts debit and trade receivables credit. So trade receivables, which are normally debit in nature because they are customers from whom we are supposed to recover the money. Now that we have completely lost hope of recovering money from these people during the year, if it is happening, we are going to reduce them from trade receivables. So since they have already been reduced, so we do not separately record them in the balance sheet or statement of financial position. But if they are present in adjustments or additional information under the trial balance, then it means they have not been recorded during the year. So they need to be incorporated in the trial balance as well as in the income statement and in the statement of financial position or balance sheet. Thank you very much.